What's going on, YouTube? In this video, we're going to talk about American Airlines, ticker symbol AAL. We're going to go over valuations, figure out a fair market value for American Airlines. We're also going to compare American Airlines to Delta Airlines as well, which I'll link. I'll tag Delta Airlines video that was posted, I believe, yesterday in this video right now. You can go check that out and see which company you like more. But we're going to compare the two a little bit in terms of revenue and other types of financials as well. We're also going to take a look at the stock chart and figure out what price action has for us, and also look at the earnings release, the most recent earnings release, which we'll get to right now. So we'll begin here on the income statement. Year over year, company is increased their operating revenues by 15%. They've also increased their operating expenses only by 2.7%. So that's good. Good to see that that's only increased by a nominal amount, and very good to see. Net income, we went from negative 1.1 billion to positive 1.3 billion, so that's a 90% increase. Our diluted share count went from 640 up to 719 million shares. So overall, the income statement looks pretty good. So we have net cash provided by operating activities on the cash flow statement here. So we got basically $5.1 billion in operating activities. We net out our $1.2 billion of CapEx, gives us $3.8 billion of free cash flow, or 7.7 billion free cash flow annualized. So turning a positive free cash flow last year, looks like we are also a positive free cash flow, but doing even better than last year. So cash flows are looking good, headed in the right direction. Assets, we have $12.05 billion in cash. So good growth here on cash. Went from about 9 to 12. Total current assets are up, mostly from cash. We have total assets, $67 billion. We do show an increase in air traffic liabilities, which tells us either increase in travel or maybe higher cost of tickets, or potentially both, or just higher cost of tickets since fuel is increasing. So that is something to keep an eye on with these airlines, which is a potential headwind for airlines overall. So overall, total current liabilities up a little bit, mostly from air traffic liabilities. Total debt is $71.6 billion. Financials, real quick breeze through them. They look pretty good. No complaints. Now let's value these two companies. Well, let's value American Airlines here. We're at the company statistics. We have a market cap, 8.5 billion. We do not offer a dividend. Financial efficiency, not great. Would like to see this better. Would like to see this in the positives. The return on equity, return on invested capital, 7%. We'd really like to see it more, but gross margin is 53%, operating margin 9%, profit margin 5%. Analysts have a price target of only $18.27. We can see we're trading at $13.17 per share right now. Over here on the calculator, Peter Lynch valuation, we got an average growth rate of EPS of 13.4 and an average 3-year growth rate on revenue of 5.8, gives us a Peter Lynch fair value of $50.66. We have a multiples comparison and gives us $105.16 per share. Our manual PE, we get 6.6 years before we earn our current market cap. Something to note is you can see our market cap is 8.6 billion, our cash 12 billion. This company has more cash than what their market cap is worth. If they wanted to tomorrow, they could buy back their entire company. Also to note, their cash from operations is more than their market cap. This to me is very, very bullish for this stock. Tells me that I would buy it. If I was to buy it today, it'd be a very good deal for me. PEG ratio 0.6, undervalued. Forward looking PEG 0.77, also very undervalued. We have Graham's valuation over here. I put a 0 in. That's for a growth company, by the way. So we could put a 1 in. This is not necessarily a growth company, but it increases the intrinsic value overall. But we're going to keep it at 0 because, I mean, it's still doubled what the current trading price is, really. So weighted average cost of capital is 1.92. Our DCF valuation, we have a perpetual growth rate 2.5. Here's our weighted average cost of capital, 1.92. Our free cash flow growth rate, I gave it a 0. And you'll see why here in a second. Analysts have 69%. Average growth rate is 220%. But we look at our free cash flow year over year. It grew. It shrunk. It shrunk. It grew. It shrunk. It's like, what do you go with for a free cash flow growth rate? So I put a 0 in for free cash flow growth rate. We're going to stick with that. And then even with a 0% growth rate at a negative free cash flow, it still gives us a DCF price per share of $69.62. Over here, we have Rule 72, our EPS PE, lowest EPS growth rate of 13.4. I put a 14 in. 14 goes into 72 five times. Five goes into 10 years, basically two times. So we're going to double our EPS two times over, gives us a 15 future EPS with a fair value of $105 a share, $73.50 for 30% margin of safety. Over here, we have all of our valuations. That gives us an average price tag for this company of $71.83 per share, or 30% buy range of $50.28 per share. Now, here's where things I want to tie in Delta Airlines just a little bit, just to compare these two companies, because these two companies are identical in terms of revenues and many things here. So, right off the bat, market cap. These numbers on the right hand side are Delta Airlines numbers, okay? Market cap on Delta Airlines right now is sitting at about $25 billion. Delta Airlines is also trading at like $38 a share. But our share count on Delta Airlines is 10 million shares less than American Airlines, okay? And they also offer a dividend at Delta Airlines. Their financial efficiency at Delta Airlines is better for sure. Their return on equity is 47%, whereas American Airlines is negative 44. Return on invested capital, 7% here, 9% at Delta. Earnings per share, EPS, 4.65 at Delta. We're currently at 3.82. One thing to note, 4.65 Delta Airlines. Again, this is relatively identical. I mean, it's not exactly the same, but it's pretty close, right? To where you can kind of just base off like, okay, these numbers, these revenues, these financials are very similar. So 4.65, Delta Airlines is trading at $38 a share, I believe. So our future PE is 4.62. That should kind of give you a pretty good indication that our future price on this company should be closer to $38 a share, right? Just right off the bat. So that's something to note. I mean, that's just one small little piece of the pie, but I mean, that's something to keep an eye on for sure. Our net income, 2.63 billion, 2.99 billion. Our operating income, 4.9, 5.14. Gross profit, 2.8, 2.95. Revenue, 553, 56 almost. So Delta makes fit more revenue. Gross profits are almost identical. Operating income getting closer. Net income only $300 million difference, but there's a $3 billion difference in net income or revenue. These numbers are very close. Operating cash flow, they have Delta at 6.9. Capital expenditures, they have $6 billion in CapEx over at Delta, whereas American Airlines 2.4. Free cash flow, only 807 or 806. They have $1 billion more free cash flow than Delta. Okay. Gross margin, 53%. Operating margin, 9%. So again, our margins are almost exactly the same. Our price target is on Delta is 57.8, price target of $18 per share on American Airlines. Revenue growth forecast, same. EPS growth forecast. These numbers are kind of screwed up down here on the EPS. So I guess I would kind of ignore that and just I wouldn't put that in as a good comp anyway, but so right there, you can kind of see these number differences and they're very, very close, right? So it kind of tells you maybe American Airlines is very underrated and very, very undervalued. Based on our calculations here, we're at $72 per share, and it kind of proves it, in my opinion, based on the financials. So, we don't exactly know exactly what's going on within the business because we haven't gone over that, but maybe that's probably definitely something to look into further to see if there's a bit of a couple red flags that's going on within the business. Let's move on to the stock chart. We can see Delta Airlines is in this wedge type pattern here. We are making higher lows, but also making lower highs up until recent. We made a new higher high, but now are retesting these lows here. This could be a potential bounce area for American Airlines. Also, there is a couple headwinds in these airlines overall is oil and the consumer. How much money is the consumer left with? Are they still going to have money to travel? Are they going to want to travel? Because there's a lot of uncertainty right now as to where the economy is currently headed. So airlines, I think, have a couple headwinds ahead of them. I don't know if those are completely priced in. You got to think that they kind of are because that's usually how it works. When analysts see or the market sees that oil is going higher, airlines typically go lower because they know that's gonna crack into their revenues or their income. and also tap into their revenues too because people aren't going to travel as much because airfares are too expensive. So anyway, that's my take on American Airlines. I think this company is worth digging into further. I think it's a better buy than Delta Airlines in my opinion. I would just take a peek at the overall company before you make any real decisions, but I would do more research on this one for sure. This one's very attractive to me. I might also be doing some more due diligence this evening and maybe seeing if I don't want to pick up some shares of American Airlines. And because I think this is a right now, based on technicals, this looks to be like a decent area to buy. There is a chance for a breakdown even further, but I can't imagine it go too much further, especially based on its current financials that they look good. So, but that's my take on American Airlines. If you found value in this video, you like this video, drop a like, subscribe, and we'll be back later with another stock analysis video.